In this session, we're going to talk about the biggest difference between stocks and options, and that's that options have a lifespan and stocks don't. All options have a certain amount of time until their expiration date. It's like looking at a whole bunch of parking meters on a street. They all have different amounts of time on them. And naturally, just like with a parking meter, more time on an option costs more money. And it should, because the more time you have, the more things can happen to that stock. If you're an options buyer, say you just bought a call on a stock you think is going up, then the more time you have on your option, the more time you have to be right. So that extra time has value. There are two parts to an options price. They're an intrinsic value and time value. If an option is out of the money, it's all time value. For example, if you own a call option at the $25 strike price and the stock is $30, then $5 of that options price is intrinsic, the difference between the $25 strike and the $30 stock price. But there will be time value as well. So say that option has a month of time on it, then maybe there will be $1.50 in time value, so the total value of that option is $6.50. $5 in intrinsic value and $1.50 in time value. That's good to know. But the other thing that's good to know is that the closer an option gets to expiration, the less its time will be worth. In the options world, we call that time decay, and it makes sense. The less time you have, the less value you have. But here's another interesting thing about options. That time value doesn't decay in a straight line. It actually accelerates the closer the option gets to expiration. That's why you need to be really confident in the move of a stock if you're buying just a short amount of time. This is how almost everyone loses money trading options. The time runs out on their option before the stock does what they want it to. In fact, there's an old joke in the options world that the stock will do exactly what you want the day after expiration. So the key here is to always buy more time than you think you're going to need, because stocks don't always do what we think they will and when we think they will. There's one more ingredient of time value we need to look at, and that's volatility. The more volatile a stock, the more time will be worth on its options. And that makes sense. If one stock jumps $20 each way over the course of 2 weeks, and a similarly priced stock never varies more than $5 each way, they're going to have very different time values on their options. The low volatility stock will have low time value, and the super excitable stock will have expensive time value. That influence is called implied volatility, and it's determined by how jumpy the stock has been recently. One way to take advantage of implied volatility is to buy your options when the stock is calm, like several weeks before an earnings announcement, and then sell them as the date approaches, because the market makers will price in all that extra volatility in anticipation of earnings. So in this session, we've looked at three components of time with options: the time value itself, the fact that time value decreases at a faster rate the closer the option gets to expiration, and the idea that time is priced higher for higher volatility and lower for calmer stocks. That gives you a good basic idea of how time value works, and that's important if you're interested in trading options, because working the characteristics of time value is one of the most dependable ways of making money with options. If you think about it, there are very few things we can depend on in the stock market because there's so many variables and unpredictable events. But there's one thing you can absolutely count on, and that is all options eventually expire. That's set in stone. And the good news is you don't have to guess. An option's expiration date is very easy to find. The trick is to use the time characteristics of options to stack the deck on your side, because if you stack enough probabilities your way, we know you'll win over time. That's how both my subscribers and myself has made so much money trading options. We use the characteristics of options to stack the deck so far in our favor, we just naturally win most of the time. And that brings us to our next video: how to determine your probability of winning.